Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, you name it, all over the world of crypto and blockchain. And I have another amazing guest, and he is the founder, CEO of StablR. I'm going to pronounce his name. He told me once, but I'm going to give it a shot. Gijs op de Weegh.
Yes, that is correct. It's Gijs op de Weegh, but it's a Dutch name which is very hard to pronounce. So thank you, Jamil, for this interview.
You're very welcome. Thank you for joining me today. And so let's kick things off and I'll ask you first, what's your background and is it a logical background for what you're doing now?
My background, I hope it's a logical background because I used to be in online payments. So I co-founded a payment company called Payvision in 2002, which was the early days of e-commerce payments. We were pioneering at that time in the payment space, creating a full product, building that out to a large payment company. It was quite an interesting time because e-commerce was growing rapidly. And I've done that for 18 years, which after 16 years, we sold a large part of the business to a large Dutch bank, and then phasing out till 2020. But it was quite an amazing ride to found a payment company at that time. So yeah, that's what we have done, and that's now creating that into a stablecoin company was quite logically the next step for me. Because we have seen payments and innovation in payments was slowing down a bit. The innovation was all around the same topics. But at the same time, blockchain came up and blockchain became a very interesting topic in this same ecosystem of the financial industry, where I think there are tremendous solutions to be built to create a better and more efficient platform.
Great. So I want to get into that today. First, I want to find out what StablR is all about, and what your stance or view is on the MiCA regulations that went live on June 30th.
StablR, we are a European stablecoin issuer, which means we issue stablecoins in Europe, and that's quite a normal subject till the 30th of June. But from the 1st of July onwards, that became a hot topic because the MiCA regulations came into place for stablecoins in Europe. The first part of the whole MiCA framework, which came into place, is about stablecoins. So we have that regulation now in place. And basically, it means that only regulated stablecoin issuers can issue stablecoins in Europe. So everything which is not regulated should be, and I especially say should be because it's currently not happening, but at the end should be banned from the European market. And that's a very interesting space to be. I would say that the regulations are pretty strict. It's a good step up in the global stablecoin space, but we saw that coming, and with the background of a regulated payment company before, me and my team, we were pretty good, know what we were up to. And we got our licenses, I would say, in a record-breaking 7 months' time from scratch to being fully licensed. And that now gives us a head start in the current market.
Great. So I want to find out how you're set up for success. Let's do that first. Let's find out how you're set up for success, and then I want to get into a little bit of the exciting things about stablecoins.
Oh, absolutely. And we can also deep dive a bit more into MiCA because it's an interesting space, because with every day we are progressing, new questions are coming up around MiCA and topics, but we will surely dive into that more. Why we're heading for success within StablR, the main point there is being regulated today. That gives us a head start over many other announced projects which cannot do business today. We also have, that's particularly for us important, we were licensed before as StablR. So we had a virtual financial asset license in Europe already before MiCA kicked in on the 1st of July. And not to make it too regulatory and too complex, I would say it's MiCA. With MiCA, you need to be an e-money institution. This was an e-money institution light, what we were in. So we had that license already before. We were in there, and having that license created for us the opportunity to build already our back-end banking network and the full solution around that. So we were able, when we started, we did only have a license, but we have a banking network, which is practically important for two different reasons. First, you need on and off ramping from fiat to stablecoins. We have several banks doing that with all different European and international banking protocols like SWIFT, SEPA, and bank-owned transfer protocols. And also, the backing of a stablecoin, especially a regulated stablecoin, is fiat. So for every stablecoin we issue, we need to hold one fiat euro in reserve. But you have to put that reserve for safety reasons at good places. We already had the time to build relationships with top-tier asset managers to get it done. Also, really good banks with good custody solutions, which were fully segregated, of course, for our own accounts. That's scalable, so our banks can accept a lot of cash, because if you start with crypto-friendly banks, you run into the problem that at a certain point they cannot hold more custody because of their concentration risk. It's a whole banking play around that, which we were able to create 12 months ahead of MiCA already because our previous licenses. And I think that's one of our main advantages in this market.
Excellent. I do want to get into complexities of MiCA. I do want to talk about some of the interesting things going on in stablecoins first, because when I look at the whole entire spectrum of crypto, right, on the very one side, I have, degen, meme coin, gambling, speculative, 100% heart attack stuff. On the other side, I have the conservative kind of boring, from the outside, from a speculative view, stablecoins, right? But you said that within that, there's a lot of interesting things going on within the stablecoins. So what are they first? And then we'll get into the complexities of the makeup on those.
Around stablecoins, it's got a lengthy background already for a product which doesn't exist that long. Let's start with the best example, Tether. I would say one of the greatest companies built. The way they managed their business, the way they were able to grow the revenues they report. It's astonishing what they did. Is it a stablecoin? I don't have a clue. There's not enough transparency to say it's a stablecoin, but to say it's a great product, I fully agree. They have made a great product in this market, and they should grow that. Stablecoin, yes or no, it's debatable. Regulated stablecoin in Europe, the answer is no, because that's their own clear answer. They said we are not gonna go after a European MiCA license for several reasons. First reason is the regulatory capital demands around European EMI licenses. As they said themselves on stage in Dubai on Token, is that they think it's too harsh to have, in their case, 3% regulatory capital demand. So that's one of the main reasons they decided to stay out of it. We have stablecoins seen going up and going down. Clearly, at the end, we all know they were not fiat backed. So it's a conceptual business model. I think what is a stablecoin, what's not a stablecoin is part of the discussion. But what is a regulated stablecoin, that's very clear. A regulated stablecoin needs to be transparent and backed, and needs to have its KYC procedures in order, its AML procedures in order, and all these other things. But the main thing is they need to be backed and transparent. And if you take those measures, a lot of simple stablecoins will fall off, and in the future, new ones will pop up in this market.
So, what does MiCA mean then for both, U.S. denominated stablecoins in Europe and then local European denominated stablecoins in Europe?
Let's start with Europe, the European euro-denominated stablecoins. If we look into the regulations, which we did, of course, the first step there is if you are denominated in an official European currency, but to make it simple, euro, because the other currencies are pretty small, you have to be licensed either as an e-money token with an EMI license or as an asset reference token. The discussions go all around e-money tokens. Asset reference tokens come with a lot of limitations and could in the future be interesting, but let's say the main example of an asset reference token is a gold token. If it's backed by gold, that's an asset reference token. That's the first step. Then it's a euro stablecoin. You have to be regulated as an e-money token, which means you need to have an EMI license, which is already a pre-existing license from the payment days. In payments, the EMI license once started. I think one of the best examples previously in the market was PayPal, being an e-money institution, went into transformed into a bank later on. But that's a good example from prepaid phone cards, which are traditionally given out under an EMI license. Neobanks these days quite often work under a EMI license. So there was already a big space of EMI licenses before the e-money tokens came into part. That in all those categories which were defined before, e-money tokens were added to that, and we have now the new part of e-money tokens under MiCA for the issuing of euros. If you want to do USD as well, issue USD, you do that under the same license. It's also an e-money token in Europe. So if you want to issue USD in Europe, you have to have an e-money license. So as said, Tether doesn't have it. Circle now created it, but you need to be able to issue that. E-money tokens are the way forward also for USD. Then compared to euro, what's the main difference? If you comply with all conditions, you can pretty much have an unlimited supply of euro stablecoins as an e-money issuer, as long as you comply with regulatory capital demands and other demands. You can put in an unlimited supply. For USD stablecoins, it's different. USD stablecoins are limited to transaction limits and volume limits. 1 million transaction, 200 million volume a day, and those are issuer-based limits. So as an issuer, you have to monitor your global your supply between different wallets. It's still for all of us a gray area how that's actually going to be, how you can enforce that as an issuer. But the regulations are pretty clear. Those are your limitations. If you go over, you have to put a remediation plan in to your regulator, and you have to bring it under, and you have to stay under. In the meantime, you have to hold it. That means also that the space for USD stablecoins in Europe, which is a very interesting market, and we're also working on that, is that if the market grows big, you need multiple suppliers because they all run up into their limitations. So that will be not, let's say, a winner takes all market, but there will be multiple solutions in the market because of the limitations as well. So that makes it an additionally interesting part. I think on the USD side, it's also interesting because moving funds within Europe in dollars, it's less efficient than euros. So also the demand and intra-bank traffic is interesting to do that on a stablecoin perspective. However, to make it a bit more complex, today the Bank of International Settlement announced that they wrote a paper that stablecoins should only be available for banks on permissions blockchains and not permissionless. So this whole ecosystem is moving with regulations, papers, advices around. So you have to be sharp, and there's a lot of complexity. But certainly within Europe, there is a very special opportunity created.
I'm gonna bite my tongue and not say anything about the BIS. So, no,
I read it today.
I'm going to leave it at that. So what I'm understanding you say, I'm trying to picture the banking, system here in the U.S. You got the four major banks like Citigroup, J.P. Morgan, or Morgan Chase, Wells Fargo, Bank of America, right? You got this four massive monoliths, and you're saying in Europe there's a limitation, so you're going to not see those gigantic banks. You're going to see a lot of other banks reaching a certain limit, but there's going to be a more robust and competitive landscape in Europe than there is in the US.
Yeah, I think there is a more competitive landscape. I think the European banking network is a bit more efficient as well as the US banking network. Still, the US banking network is very traditional, but also in Europe, there is within the European ecosystem, there's a lot of dollars flowing around next to the euros. And that in the long term, they are looking for solutions to get that done. But that falls on the European regulation. I think that's a very important carve out to have. And if you want to do dollars in Europe, you are back to the euro dollar again.
Got it. So you said new solutions will pop up. Like a few years ago, you had a few different stablecoins that have come and gone, but now you have institutions. You mentioned PayPal, you mentioned Circle, right? How does Circle status in Europe affect the landscape of smaller firms like yours? You find yourself going to be squeezed out. How do you navigate that in the altered space now?
It's hard to code. So I think there's enough space. From a business perspective, we have a unique proposition which is currently different than Circle, so we can work alongside each other. I personally think it's really good that a company like Circle get their licenses, because it also shows that the market is there, that the interest is there, that also the large players in the market currently do have the incentive to work hard to get things done in the European market. So for us, that's it's very preferential that also Circle got in there, because from the 1st of July, we see a major shift, and all the support they are needed is only a great additional source for us to build on. So we need to create a market. I tried to do that ahead of MiCA myself. That was pretty tough, because at the end, everybody said, yeah, doing something now, we don't know how the regulator will react. Let's wait for MiCA for the 1st of July. So now that market is there, that market is recognized by international players as well. So together we can finally build a market, which I was aiming for 2 years ago already.
When I got into crypto in 2017, I thought the easiest path forward for crypto was payments. I was wrong. It's the hardest path forward, right? What are some of the complexities of legally compliant fungibility for stablecoin issuers?
You immediately dive into the most interesting topic which came up with MiCA. It's the whole discussion about fungibility, but taking one step back, payments in crypto would be the obvious use case. I agree. I disagreed in 2017, by the way. I was working on the payment side of it, and I saw everybody talking about Bitcoin payments. I thought, why ever would you use this slow network with high fees to compete with our current payment rails? The payment rails was pretty good at that time. Stablecoin was volatile, slow, expensive, so I couldn't see it there. I saw more the speculative and custody use cases there. When stablecoins came out, payments became a lot more clear for me, and the payment space in the future will, in my opinion, by far outpace in size the crypto market, because no matter how big the crypto market goes, the payment market will be bigger. Even if you want to buy crypto, you do a payment transaction, but we not only from now on for the rest of our lives only buy crypto, we also buy other stuff, which also payment transactions. So for me, by definition, the payment market is bigger in the longer term than the crypto market. The current opportunities within the crypto market. Going back to your question about fungibility, it's a very complicated topic, because if we talk fungibility of stablecoins, for me there are two aspects to that. First of all, you cannot make stablecoins not fungible, because that's how is it ever going to work on a global scale. We don't want to go back to put that many limitations onto blockchain, which was designed as an open network, which could be globally and efficiently used. If you put that much limitation to it by getting fungibility out, then we undermine the process, and I think you also undermine the regulation. So fungibility is good, it should be there. The question is, how can something be fungible if it's not the same? If you got two different assets, because one has a different demands than the other, are they really fungible? So that's for me the question is, are they fungible, or what's the mechanism behind to create an open solution that can be used globally in an efficient way under different regulatory regimes? Time will tell how that works. It's also how Circle announced quite a lot around fungibility. It's interesting how that works out, because if you make it fully fungible, the regulations are don't have a lot of value and a lot of worth in the market, because you can easily undermine them by issuing the same in a different jurisdiction, and keep the monitored part really slow, and do the far more majority in a less strict regulated or even unregulated space. So that's an angle you don't want to go to. So fungibility at a certain point would come, in my opinion, with adhering to the strictest regulations which are around. And if you adhere to those regulations, you have got full fungibility. But over time, that will work out more, because it's a discussion which recently started, and we also have to see how regulators are going to work on fungibility. But I fully agree, it needs to be there in some way or form. But we also, if we think MiCAR and regulating the stablecoin and the crypto market is a good thing, we should also keep in mind that there should be something to have regulatory oversight over. With fungibility, that could become very small. So it's a level playing field, and I'm actively following how that works out and where the opportunities are around it.
To me, it would make more sense if, you're talking about euro-backed, about US-backed stablecoins, could become fungible. What about algorithmic? Like we saw Terra Luna and what happened because of that, right? What does Micah say, or about the possibility in the future of algorithmic stablecoins?
Yeah, I think the easy answer. Okay, the term stablecoins is not defined. So it's e-money tokens, which is a defined term. Stablecoins are not defined. So anybody could call anything a stablecoin. Going forward, is it a stablecoin or a crypto asset? Is Terra Luna just a crypto asset with a great background? Same with yield-bearing stablecoins in Europe are not possible because it's not you're not allowed to pay interest on the stablecoin. They can come up in many different forms, although not as regulated stablecoins. But the fact that somebody can earn on a product itself is a great solution. To answer that question, I think the main point is to go one step deeper into MiCA, and that's not around the first phase, which is now implemented, which is around stablecoins, but it's more about what happens to crypto assets. How will crypto assets be regulated? And the Terra Lunas, in my perspective, should comply with the crypto asset regulations at a certain point. So you have stablecoins, service providers, the platforms, and the assets. And for me, it's a crypto asset thing, and that's the third part of the whole process. But an interesting part, because it applies to, in my opinion, to the Terra Lunas, is can you build an algorithmic product? Why not? If it applies to the regulations around crypto assets, and therefore you should not publicly call it a stablecoin. But if you have a token with a certain experiment which applies to the local laws, you can offer it in a local market.
Got it. Okay. All right, good. So I was going to ask you about the knock-on effects for the US and other regional stablecoin issuers and other crypto asset issuers around the world because of the regulation going live. What are the additional unseen or unforeseen, effects?
I think there are a lot of eyes on Europe at this point. Europe made a head start in regulating crypto assets and this market. Europe is normally a jurisdiction which follows other jurisdictions, and once it's implemented somewhere else in a good way, then Europe follows. In this case, Europe took quite a stance in being on the forefront. So all eyes on Europe at this point. And that's also with fungibility. All these topics now evolve in the European space, and the solution needs to be found in Europe. If that's well done, you actually have a blueprint for other regulators to regulate stablecoins in other markets as well. So one of the effects is that this could be the standard. If it's well implemented, it could be the standard for global stablecoin regulations, and that could also affect global stablecoin issuers in other jurisdictions to issue that. But it's really based on the effectiveness of the regulations and the fungibility handled in a correct way. Then I think there's a great knock-on effect from MiCA to the rest of the market.
Let's talk about Europe a little bit. A little bit more, right? And then the next big thing, or big things in the European crypto markets, what do you foresee them as being?
In the pure crypto market, the regulation of exchanges coming up. And so second phase of MiCA, now the application needs to be in before the 1st of December for simply call it exchanges. They need to request their MiCA licenses. Then they will get that licenses till December the year after. All those licenses will be issued. But that license creates the opportunity for every domestic currently solution to go all across Europe. So I think that will be a big shift of the whole landscape, that the largest one in the Netherlands can easily export their product all across Europe. The large one of Spain can do the same. So I think that will be a big shift in the crypto market itself. The stablecoin market, the first thing is that outfacing USDT in the market will have a new demand for liquidity. That's a very important one. So I think that's the first two steps on the stablecoin side. Then we have the passporting all across Europe of exchanges, and then we have the regulation of crypto assets, which will be the next interesting step from a regulatory perspective, really focused on Europe.
So let's talk about the elephant in the room because this thing I'm gonna tell you surprised me. All right. And they did it. Germany said the German government, Germany biggest country in the Europe market, right? Said we're getting rid of our Bitcoin, and they sold off their Bitcoin. The government, Germany sold all their Bitcoin to the open market, right? Why is Germany getting out of Bitcoin? What are the ramifications for that across the rest of the continent?
My first question would be, why would the German government hold Bitcoin? Especially for a country like Germany. It's a very conservative country. So why are they holding it? I think a lot of these choices are also political. The political landscape around Europe is changing. So that's what you also see in the US now, of course. Crypto is becoming an important topic in the upcoming US elections. So many of these choices are also political, what I believe. And the German government would better hold stablecoins than crypto assets, because it's the same with pension funds. It's pretty volatile to hold for them at this point. It's our public money. Do we? It's a personal choice to invest in crypto. Is it a government choice? Should they gamble with our funds? Because if you look at even at the last 12 months, Bitcoin has been pretty volatile. So I don't know. I don't know if it's something which is a suitable thing to do at this point for a government.
So okay, that makes sense. It's volatile. It's the stable coins are better suited under the regulations. Um, got it. That makes sense to me. So I was looking at it from one side. I was looking at it from the entirety.
Yeah. There are two sides to every story, right?
Yeah. Yeah. Well, the political environment is changing, right? You have a whole bunch of elections coming up, this later this year. The US is going to be in November. You got like 30 countries having elections. How do you see predictive results of elections impacting crypto, and what do you think is going to be the result?
I'm not a US specialist, but I think it's becoming a topic. I think 4 years ago, you could not have imagined that crypto actually would be a topic to be discussed during presidential elections in the US. It becomes now a topic because there's a lot of interest from the public. So that's good. In Europe, it's less of a political topic because the framework is there. So at a simple point, whatever any government, which government is chosen across European countries, MiCAR is pretty clear about timelines. And around stablecoins are the part of MiCAR which is implemented into local law because it's under the e-money regulation. So it's still, you could do something with the implementation there. If you take, for instance, the licensing of exchanges, that's European law. So whatever government is coming up, you have to change European law. And if you know how long it took to get there, you're not going to change that one overnight. You can step out of the European Union and make your own regulation. That's probably the fastest way. And it may be what maybe one or two countries maybe will do in the future. But that will not be because of crypto regulation, that's for sure.
Got it. That makes sense. Thank you. So I want to thank you very much for speaking with me today. Giving me a lay of the land. I appreciate it. I really like talking to you. And I have one last question. So how can people find out more information about you, about StablR? How can they do that?
They can look us up on our website, which is stabler.com. You can find us on LinkedIn, X these days. You can find me under GW StablR on X. So there are many ways to find us. The company, of course, under StablR. So there are many ways to find us, to follow us, because I think within the next couple of months, there's a lot of interesting news coming up and a lot of great announcements for us to make.
Awesome. Thank you very much for your time today.
Thank you.